In today's video, we're going to be talking about the two biggest factors for getting paid and staying paid in the life insurance business. If you like these videos, please remember to subscribe, to like, to share, and turn on those notifications so that we can inform you when we're putting out new content just like this video. We love comments from our watchers and those people that subscribe to our channel, so we'd love to hear from you. We also love it when you share our content with others so that they can get that as well. In today's video, we're going to be talking about two P's, the two P's that are the biggest determining factors in you getting paid and you getting stayed paid. I don't know if even that's the way to say that, but getting paid and staying paid. How about that? Let's try that. When I first got into the life insurance business, I wrote my first policy. It was $43.10. It was off of a final expense lead in McCreary County, Kentucky, a little tiny county down in the bottom of Kentucky, right in the southern end of Kentucky, near the Tennessee border. And I wrote my very first policy, $43.10. And I was excited about that. It was my first venture into the life insurance business. I remember exactly where his table was. I remember where the door was. I remember what the home looked like when I walked in and sat with this gentleman. He was a widow, and had a great conversation. That policy got issued. It got paid. I received my advance deposit, and then 10 days later, I got a chargeback. I got a chargeback. That client did not pay his first premium. I was advanced my commission from the carrier, but the client's first premium did not go through. And that was when I first realized that not all the money coming into my bank account was mine. In fact, I had to learn what an advance was, an advance on commissions. So if you're new to the life insurance business, or if you're wondering how to manage your cash flow, or maybe you're frustrated with chargebacks, this idea of chargebacks, or two words that I'm going to identify today, placement and persistency. If you are just now discovering what that is, this video is going to help you. Because 10 days later, when I got that chargeback, I realized I needed to do some work during the sales presentation, and I needed to do some work after the application was submitted to ensure that that policy got placed, number one, and that policy stayed on the books, and that client remained covered and his family remained protected. So let's first talk about placement. Placement is when you write an application, the client agrees, you've gone through your presentation, you've done your talk, you've talked about the stakes, you've discovered the benefits, you found an affordable premium, and you write that application, you submit it. Whether you're doing e-app, paper app, phone app, whatever that is, you submit that application. Placement is when the company approves the policy in underwriting, and then the first premium is applied to that policy, which puts the policy in force. In life insurance, when you took your pre-license exam or pre-license course, they taught you about the exchange of considerations. You have to apply for a benefit, and you have to put a form of payment or deposit on that, either with a pre-authorized check, an ACH payment, or a payment in full. And the company then responds and processes you through underwriting and then applies that payment if approved. And once that payment is applied and they've approved you, then the policy is in force, and that client is protected, and so is their family. That's called placement. Well, what happens when one of those things doesn't happen? So what are the factors that are going to control whether that policy gets placed? There are two real considerations that we need to make here. Number one is an underwriting issue. Underwriting. So the first thing that I recommend you to do, if you're new to the life insurance business, or if you've been in the business for a while and you're transitioning maybe to this specific industry, maybe you've been in health or some other field, and now you're transitioning to just do solely life, I want you to understand that your underwriting is key. So dial in on maybe 2 or 3 carriers and get to know those carriers really, really well. When you get to know those carriers well, you're going to come to a determination very quickly whether that client will approve for that particular policy. And it will help you with your confidence and also your competence in moving through that process, because you'll understand the health impairments or potential health impairments of the client, and you'll be able to make a determination which carrier is the best for them and also which plan is the best for them. So get to know those products really well. Also, get access to a team, a support group, a help channel, a Slack community, a Facebook group, your upline, your cohort at work, your business team and your call center, whatever that is. Stay connected to them so that if you have any questions regarding underwriting, you can ask somebody else who knows what they're doing, and they can give you that reassurance that you're looking for. We have agents that work with us all the time, and we have a channel that people ask help questions in, and they can get real-time answers. This will be important for you. Get connected to a community that can also assist you with underwriting. And when in doubt, call the underwriter, do an assessment. Get a pre-assessment risk analysis essentially done before you actually submit the application to ensure the client can qualify. But only do that as a last resort. So that's the first part, underwriting. Second part is affordability. That's going to be the second piece that's going to determine placement. Oftentimes, we're excited, we're moving through, the client seems to be engaging with you, you present your prices, and the client picks a price, and everything seems to be great. But yet 20 days later, 15 days later, 30 days later, when that first premium is supposed to draft from their account, especially if it's post-dated, the premium doesn't go through because there's insufficient funds. And that's most often the case. When this happens, the client is generally embarrassed. They don't want to discuss that with you, and so oftentimes they'll ghost you. One of the things that's important here in your underwriting and your sales presentation is to take your time with your client when presenting prices. Let them know that the affordability issue is really important to you. It's not as important with mortgage protection and with younger families who obviously have good control or an idea about their budget. It's more important the older your clients get, where they're on fixed incomes or Social Security only, and they're really not going to get raises. And when one thing goes wrong in the month and they spend extra money, they don't have the money to cover the life insurance premium. It's important for you to make sure that when you're going through pricing, that they know you have their affordability in mind. You may be presenting 3 options. They may choose option number 1, which might be your highest priced or the most benefit with a slightly higher premium. They may choose that because in their heart, they want to protect the people that they love the most. In fact, you just had this engaging conversation with them about it. And they have a value there. You touched the heartstring. You got to their internal need, and they picked that premium number 1 option. Well, they might have picked something that was a little too high for them. So here's a great thing to ask your clients once they choose that. Now, Mr. and Mrs. Smith, I want to make sure that this premium is going to be good for you. Good today, good tomorrow, good next month when something happens to your hot water heater or something happens to your daughter's car, your adult daughter who's raising your 2 grandchildren by herself, and she needs your assistance. I want to make sure that premium is still going to be affordable for you. I don't want you to think of this premium as the first thing you cancel to help your family in that situation. And I want to make sure that this is going to be an affordable premium for you. And if you feel like you're making a little bit of a stretch, it's okay to let's choose option 2 or option 3. Remember, your goal here is to protect your family. And if we're picking something that might be a little too high and we cancel that, we've negated everything that we've actually worked for, so you're actually not protecting your family. I would rather you choose 2 or 3 if it's going to be more affordable. It's amazing what will happen when you do that. Clients will realize that you have their best interest. They'll realize that they can trust you because you weren't trying to extract the most money from this sale, and you're actually thinking about their affordability. It'll make a big difference. Even when they speak to their family about it or their beneficiaries or a daughter or a son who might be suspect as to what they did, they might even use that as an opportunity. He didn't try to oversell me. He actually made sure it was in my budget. So that can make a big difference. And then the other part when it comes to affordability is ensuring that you set up the premium payment date on a date that is going to be the most likely that they're going to have the funds in place. So again, not so sensitive when it comes to younger families, mortgage protection clients, but the older you get in your client demographic, if it's a final expense type customer and they're on fixed income and Social Security, they're used to getting that Social Security deposit on a specific day every month. They're getting it on the 3rd or the 2nd, 3rd, or 4th Wednesday. It's going to be important that you align the ACH payments with the date that they receive their Social Security. So if you have carriers that cater to Social Security billing, they will give you the option to select either the 3rd of the month or the 2nd, 3rd, or 4th Wednesday. Now, you're not going to have this full conversation with your client about this, but this is going to help you with your placement. It's also going to help you with your persistency, because the day that their Social Security deposit hits their bank account is the same day that the premium is being paid. And here's some language that you can use to make this easy for the client. Seniors particularly don't like the idea of people getting into their bank account to take their money out or meddling in their bank account. They're not comfortable with that. So you're going to make a statement like this. We're going to set these up to be paid when you receive your Social Security benefit deposit, okay? So when you receive that, it's going to automatically be paid through the bank once a month, so you never have to worry about it. So whether if you're out, or if you're in the hospital, or if you're trying to take care of your wife, and you don't have to remember to make that payment all the time, because you're going to authorize your bank to actually make it on your behalf on that Social Security pay date, okay? We'll set it up that way. And when you say it that way, your client will 9 times out of 10 say, yes, that's great. I understand and I want it that way. So these 2 tips right there, affordability and then the payment date, is going to dramatically impact your placement and your persistency. Now let's talk about this other word, persistency. What does that mean? Persistency actually is how long this policy stays on the books. Are the policies you're writing in force when that client passes, and does their family receive the benefit? Ultimately, that's the goal when you write a life insurance policy. Otherwise, we wouldn't even be in this business. However, agents oftentimes miss opportunities to ensure that their family receives that benefit by missing a few key things that they need to follow up on. So when that policy is issued, it's important to follow up with your client to let them know, Mary, your policy has been issued. You should be receiving that in the mail in the next, 7 to 10 business days. You may have received an email, depending on whether it was delivered via email or through traditional mail. Let them know when it's coming. Follow up with them to see that they got it. Also, follow up with them to see and let them know if that first payment has been processed, their policy is in force. Let them know if they've had to follow up with them and ask if they've had the conversation with their beneficiaries as to the benefit and where the policy is, to ensure that they're putting it in the right place. Like, have some follow-up conversation with your client after the policy goes in force. And stay in touch with your client at least 2 or 3 times a year. And especially on the annual review date of the policy, it's important for you to circle back to your client and let them know you're calling for an annual review. Not only is this an opportunity for you to stay connected with your client so they see you as the agent, but it also gives you an opportunity to discuss other products that you might have available, any health products, Medicare products, hospital indemnity plans, cancer plans, anything else that you might have available in your arsenal is now a good opportunity to revisit that. And also, it's a good time to connect with them and to maybe even extract a referral to their beneficiaries if you've not already done that. So, 2 big areas in business that a lot of agents miss, and as a result, they lose a lot of money, are the area of placement and the area of persistency. And these are just some tips that will help you improve both of those so that you'll keep more of the business you write, more of it will get issued and paid, and more policies will be in force when your clients' families need it the most. Hope this one helps. We'll see you on the next video.